All right. Hello, everybody. Thank you for joining us for our business owner workshop with Judith Seid and Mandie Bullock. I am Robert Seid. I am a partner at Blue Summit Wealth Management, and I focus in financial planning and sustainable investing for our clients. As an owner in two small businesses, one being Blue Summit, the other being a commercial fishing operation, I really enjoy helping others make the most out of their unique financial opportunities as small business owners. So we'll first go over some of the kind of house rules and how to interact with us through the Zoom webinar. And then we'll talk about the schedule, and then we'll go into some introductions, and then we'll get started. So first of all, to interact with us, you can, at the bottom of your screen, whether you're on a computer or a phone, there's a few different ways to do it. You can hit the Q&A button and you can ask questions. I'll be the MC and can field those questions. You can also hit the chat button, kind of does a similar thing, or you can also raise your hand and then we can interact on chat that way. So next is the schedule. So we have about 35 plus minutes of presentation, and then we'll leave about 5 or 10 minutes at the end for Q&A. And if there's any questions that you have that we don't get to address on the webinar, we can address those offline. So I'll be keeping track of those, and we can follow up with you afterwards to make sure that any of your questions are answered. This will also be recorded, so we'll post that on YouTube in a day or two afterwards, and we'll send you the link so you can watch parts that you might have missed or share it with people who might be interested. So some of the main topics that we're going to be covering today are choosing a retirement plan for business owners, tax saving tips for a small business, and optimizing your investment portfolio. So we'll have time for questions at the end. Again, if you have questions during the middle, just shoot them my way. So let's make some introductions. First, Mandie Bullock. She's been an attorney for 12 years. She's up on the screen there. And her focus is estate planning and child's protection, protecting kids in the family for any financial reasons. She's passionate about helping families create happy and secure futures. In her spare time, she enjoys yoga, mountain biking, and exploring the outdoors with her family. And Judy Seid, in the blue shirt there, is a founder and partner at Blue Summit Wealth Management and a licensed certified financial planner. She has been helping people make smart decisions with their money for nearly 30 years and has specialized in sustainable and responsible investments for that entire time. Judy has served on the board of San Diego Financial Planning Association and is a well-known speaker on topics such as retirement and financial literacy. In her spare time, Judy enjoys cycling and enjoys backpacking in the Sierras. So without further ado, I'll hand it over to Judy and we can get started.
All right, thank you, Robert. That was great. Just remember, if anybody needs any help with controls, Robert is the one who's going to help you. So give him a hands up or a question online there. So we're going to get started. We want to be respectful of everybody's time. Thank you for taking your time out today. Some of you on this webinar, I know, some of you I don't, and maybe we'll get to know each other better. So I'm going to start off by letting you know the 5 things I'm going to cover today, and then start with my first topic. And then we're going to switch and we're going to go to Mandie, and then she's going to do a topic, and then we're going to come back to me, and so on and so forth till we're out of time. And then we're going to take questions. So I've got 5 financial tips for building a successful small business, and all of you should see that up on the screen right now. Choosing a retirement plan for business owners, tax savings tips for small businesses, aligning your personal goals with business goals, succession planning, sale of business, and assembling your financial team. So those were the top 5 things I felt were important for small business owners. As an overview, any one of these could be a whole complete hour or day-long presentation if you wanted to get into the weeds in and of itself. So we're going to go over some of the important topics right now about choosing a retirement plan. So I'm going to start off here talking about solo 401k plans. This is an often overlooked small business retirement plan that we find is really great for an employer that doesn't have any other employees except perhaps a spouse. And that's what this plan was designed for. So if you have an employer, you likely in today's world have a 401k plan available to you through that employer. But if you're a small business, you've got to do it yourself. And a solo 401k is designed for a business owner that has no employees. It has a very high contribution limit. It's up to $58,000. And you're going to see here a little chart down at the bottom that shows it was 57,000 last year, and that's going up to 58,000 today. But that's split. The way it works is it's split between what's an employee contribution and what's considered an employer contribution. Well, when you have your own business, you're the employee and you're also the employer. So you do it in two parts. As the employee, you can actually contribute 100% of your compensation up to the $19,500 limit. And then if you're over 50, you get a bonus of an additional $6,500 for a total of $26,000. And then to reach that $58,000 maximum, you can also contribute as an employer, kind of like a profit sharing. And that's either 20% or 25% of your net income, which is a little bit of a complicated formula. Usually your CPA will calculate exactly what that amount is going to be, but it just depends on your corporate entity. So if you're an S Corp or a sole prop, it's 20%. If you're a sole prop, or partnership, it's 20%, or if you're incorporated, it's 25%. And you can use that profit sharing to reach that total maximum of 58,000. And so it's just a really great tool that a lot of people don't know about. With the simple IRA and the SEP IRA, which I'll talk about in just a second, you can't contribute 100% of your compensation. It's basically a percentage up to that limit. And so this slide explains how the spouse, if the spouse is an employee, can also be included. The spouse does have to be an employee to be included on the plan. In addition, one of the nice things about the solo 401k is you can do the employee portion as a Roth if you wanted to. So the Roth is a after-tax contribution versus a pre-tax contribution, with the advantage being that the earnings are going to be tax-free when you pull them out. None of it is going to be taxed when you pull it out because the money that you contributed was already taxed. Some of the other types of business owner plans are the SEP and the simple, the 401k, 403b profit sharing plans. Usually if you have an employer, you'll find that you could still do an IRA, you can still do a Roth IRA. And your SEP and your simple have different ways of calculating the contribution limit. So what's best for you depends on what your business is earning and what you're trying to accomplish. With a SEP and a simple, if you have employees, you don't have a choice to use the solo 401k. So you can look at a SEP, you can look at a simple, you could look at putting in a 401k plan, but those are going to have more administrative costs than the SEP or the simple. The SEP is also a percentage, whereas the simple is 100% of your income, but only up to the $13,500 limit that you see here, with $3,000 as a catch-up. So the limit is much higher with the solo 401k, which is one of the reasons why I wanted to introduce that to some of you here today who might want to consider that. And then within, and I know there's a lot on these slides, so I'm skimming over it. If there's any questions, please shoot that out. In addition, within your retirement portfolio, it's very important to optimize your portfolio, making sure you're diversified, knowing how long your time horizon is. I have some bullet points here, set aside any accounts for short term, if you're planning to buy a house and pull money out or retire shortly, or if you have a very long-term time horizon, that's going to be a different portfolio. So this set of pie charts shows 6 different diversified portfolios from lower risk to higher risk. And this is a lot of what we do with our portfolios for our clients. And obviously what risk you're willing to tolerate is an important part of the equation. So I'm going to turn it over to Mandie to give you some estate planning tips for business owners. Take it away, Mandie.
Thanks, Judy. Yeah, that was great. Thanks for clarifying all those different retirement options. That's, yeah, really good info.
Complicated.
Yeah, but yeah, it's really good info. Okay, I'm going to share my screen now. All right. Okay. All right, so yeah, I am going to talk about your 5 key elements of a small business owner's estate plan. So that's me and my family. All right, so the 5 elements would be 1, your living trust, life insurance, a buy-sell agreement, a business succession plan, and to get organized. All right, so first I'm going to talk about why a living trust is so important in your business estate planning. So, move this over, sorry. Okay, so a trust, why is a trust so important? Unlike a will, assets put into a living trust are not subject to probate, which is the court process. And beyond avoiding the hassles of probate, this also means that your business affairs remain private. A living trust has several other advantages over wills. So 1, it transfers your assets immediately upon your death in the privacy of your attorney's office versus the court. And it lets you designate a successor to take control of the business. It saves on estate taxes, court costs, and legal fees. Okay, so yeah, the state has an estate plan for you if you don't have a trust, and it's called probate. I'll tell you a quick story that reinforced for me why estate planning is so important. My mom passed away 8 years ago with no estate planning in place. She had been meaning to do it. She had no will, no trust. So my brother and I had to deal with probate. So this was a long process. It took over 2 years. It was super expensive. We had to post a pricey bond each year. So yeah, looking back, she could have avoided a lot of the stress with the trust. She could have put her share of her house, all her own personal property into the trust. She could have named a trustee who was, maybe a little removed, a sibling or a friend who could have distributed the whole estate to my brother and I outside of court, privately, quickly, allowing my brother and I to grieve without that added stress. So just to quickly review, the state's estate plan for you, if you have no estate plan and you become incapacitated or die, the state's plan is going to court, so a judge can appoint someone to make decisions for you and give your family access to your assets or direct where your assets should go. And this is called conservatorship if you're incapacitated, or probate if you've died. So the court decides where your money goes, and it may not be to who you would choose or in the amounts you choose. So yeah, here in San Diego, it costs roughly 5% of the gross value of your estate. And this is a combination of executor's fees, appraiser fees, court fees, bond premiums, creditor claims. So if your only asset is a house worth $800,000, probate is going to cost about $40,000, regardless of the equity value. And probates here in California take a minimum of 12 to 16 months. During that time, your loved ones won't have access to your assets. And then someone appointed by the court who doesn't know you or your family would sell your business in a distress sale or fire sale for pennies on the dollar. And if there's multiple owners of the business, this court appointed person would be in the middle of a buyout. So definitely nice to avoid that for your family. Okay, and then I'll quickly go over how to put your assets how to put your business into the trust. So for a sole proprietorship, this is an assignment of your business interest. So that's how you get your sole proprietorship business into the trust, and that's how you avoid probate on the business. For an LLC, we would do an assignment of LLC interests and then an acceptance of substitution. So that's how we put your LLC into your trust. And then for an S Corp, similar, we do an assignment and transfer of stocks and issue new stock certificates. If we have time, I can talk about kind of what the difference is on these different business entities. Maybe we'll come back to that, and yeah, I can kind of explain that. And let's see. Yeah, I just wanted to show you this slide real quick. So yeah, it's really important to make sure all your assets are in your trust. That's the way to avoid probate, the core process. So, you know, your house needs to be in the trust, your business interests, your investment accounts, your stocks, your personal property, changing life insurance beneficiaries, retirement beneficiaries. So that's how we stay out of court for your loved ones. All right, I will send it back over to Judy.
All right, sorry about that delay. Here we go. I'm now going to move down to my next slide, which is tax savings tips for small businesses. Everybody wants to know how to pay less taxes. Why is that? Well, we want to be able to go out to eat and travel and do all those fun things. So there's a lot of things you can do here. Let me just say the one caveat here is we are not your tax preparer. However, we as financial advisors work hand in hand with our clients' tax preparers. We know a lot about what you can do. The first thing on my list here is obviously maximize your retirement plan contributions. Like we talked about, the solo 401k alone, if you were to max that out with that $58,000, you would save about $20,000 in taxes for every year you contributed the max. If you are in the 35% bracket, but if you're in a 45% bracket, now I'm talking combined state and federal, you'd save about $26,000 in taxes for every year you contribute the max. And that is a per person max. So you multiply that times 2, and that could be a $40,000 tax savings each year for a couple, or $40,000 to $50,000 tax savings. So that's number one. And that's true whether you are self-employed and you have a business retirement plan, or you might be on this webinar and be self-employed or a business owner, and you might have a spouse who has a 401k. And we want to make sure that everybody is contributing to their tax deferred savings plans that they have available. Another tip that I have for people who are self-employed or small business owners and have children under the age of 18 is you can hire your children. This is kind of a not that often talked about tip, because you have to have kids under 18. It's a limited opportunity, shall we say. And it does work different if you're corporated or unincorporated. So you really have to be unincorporated for this to be a benefit. And if you are unincorporated, say you're a sole prop or a single member LLC or just a husband wife, then you can hire your children to do tasks available for them to do in the business, and their wages will not be subject to any Social Security, Medicare, FUTA taxes whatsoever. So you can take that income right off the top of the business and pay it out to the child. Of course, you have to keep good records and keep track of all of that, but you would obviously be working hand in hand with your CPA. So I can tell you that, when I first started in business, I actually used that. So that's a personal story from me, and which is why I really like to share it with you here today. My next tax savings tip is kind of a catch-all, because there's a little bit of everything in here. It's all of your business expenses. It's very important to accurately keep track of your business expenses, and it's very easy to forget to do that. We might have different credit cards, we might have different ways of paying things. We have Venmo now, we have check writing still, if people use that. And it's even become more difficult. So I always suggest that you keep a completely separate business credit card, so everything that is a business expense can be tracked on there. The auto is really important. You can take your auto and you can take the business use. If you have say 50% business use, well then 50% of all your car expenses, or you can do it by using the mileage rate. Legal and professional fees, your CPA fees, your tax prep fees, your accountant fees, any kind of legal and professional fees. Home office, that's a really difficult and tricky expense, because your business use for home office is going to be a percentage of either your rent, unless you're a homeowner, and therefore it's going to be a percentage of all your expenses, your property taxes, your mortgage. It becomes a little more tricky. So if you have a little house with a big office, then you get a larger percentage deduction. So that's always important to take a look at that. And it has been a target for audits. They've been clamping down on home office. So it's very important to work with your CPA or tax preparer and what makes sense for you to claim. Advertising and promotion, any kind of marketing, any kind of advertising. This could mean, any kind of social media that you're doing, any costs involved with that. It can add up. Business meals, those are now capped at 50%. So it's very important to remember you can't deduct all of your business meals any longer. That's something that changed. Business insurance. This is also a little bit of a personal story. About 28 years ago, not long after I got licensed to do investment work for people, I bought my own long-term care insurance, and I found out at that time that's actually able to be a business deduction if you pay for it out of your business. And it can be for yourself and your spouse, even if your spouse is not an employee. The amount of the deduction depends on the corporate structure and your age. So it gets a little bit complicated, but the important thing to know, besides your regular business insurance, long-term care insurance is a type of insurance that is very good business deduction, and a lot of people aren't aware of that. Obviously, you can write off your medical and other insurance like that. Education, don't forget about education, any education expenses, any technology expenses, and then travel is the last one on my list of tracking all expenses. Obviously, there's more than that, but these are ones to watch out for. And then just, I can't emphasize enough, work closely with your CPA. All of your expenses must meet the IRS criteria. So that's it for, oh, one more thing. Sorry, I have one more very important thing. We actually recently helped a client with using their corporate tax structure, the corporate structure to save taxes. So they already had an S corp, but they were paying out all of their net income of their S corp as wages, and they've been doing this for many years. Well, we got hired as their financial planner, and we very quickly found out they were doing this and suggested that they pay a portion out as wages and a portion out as profit distribution. It's actually part of the advantage of incorporating. And you're going to see on this slide here that, and this is just an example, these aren't real numbers for them, but they very easily could be. As a sole prop, you know, they had if they had 120,000 worth of net income and they paid it all out in wages, these are the taxes that they paid. If they split that up and paid a 60,000 wage and 60,000 out in profit, they actually saved $7,460. So, you know, that's every year. So it's very important to align what you're doing with your corporate structure, along with the best tax advantage that you can. All right, and that's it for some tax savings tips. And Mandie, I'll turn it over to you.
Thanks, Judy. Okay. Okay, this is a quick one, I think. So my number 2 item that should be in your business estate plan is life insurance. So unless your business generates significant cash flow and will continue to do so upon your death, that income might not be enough to financially provide for your family. So to offer a safety net for your heirs, your team, your customers, you might want to invest in life insurance to provide liquidity while your family handles your affairs. So that's all I have on life insurance regarding your business. I don't know if Judy has any more to add on that, but I will turn it back over to her.
No, I think, thank you, Mandie. That's fantastic. Mm-hmm. All it takes is one little thing that can help somebody, and we've done our job today. So, all right, my next topic is about goals. Business owners have it tough. There's so much to think about. There's, you know, everything with starting the business, everything with, you know, if you have employees, there's, you know, your business model, there's your service, your product. There's so much to do, and it's very easy to forget about your personal goals. Sometimes starting a business and running a business is 24/7 what business owners think about. And it's so important to keep in mind that you need to align your personal goals with your business goals. You know, what is important to you? How hard do you want to work? How much money do you need to make? Do you have children to put through college? Are you going to be there for them What do you want to do with charity and gifting, and what's your retirement timeline? So many
Hey,
things.
Judy, I'm sorry to interject, but your screen is not being shared, so I want to make sure you share that.
Oh, whoa. I am so sorry.
No worries.
There we go.
We're looking out for you.
I'm a little bit of a Luddite. I'm getting there though.
Good job.
Thank you
Good
for your
recovery.
patience. This is the slide you were all supposed to be seeing while I was chatting about aligning your personal goals with your business goals. And so again, determining what's important to you, how do you do that? It's difficult when you're working and running a business and that's all you think about. I can tell you what we do to help our clients. We sit down and we do a goals meeting, and it looks something like this. I know this is a really busy screen, but this is a true life example with the names changed to protect the innocent. So we have Diana and David, and they told us these were all the things that were important to them. Setting aside money for their kids' down payment, spending more time with family, living healthy, worrying less about money, selling a business, taking off time to travel, staying healthy, living to age 100, and so on and so forth. They had some other goals down here, but this just gives you an idea. We really sit down and with a blank slate and list out what's important. So, people can really get this aligned with what they're doing in their business. So hopefully that will help everybody at least put that in the forefront of your mind. So that's back over to you, Mandie.
Thanks, Judy. Yeah, that's so important to go over, to have that work-life balance. So important.
Hard.
Very. Okay. All right. So my third item for your business estate plan, a buy-sell agreement. So this is if you have multiple owners in your business. This is super important. So yeah, if your business has multiple owners, you probably need a buy-sell agreement. And a buy-sell agreement basically ensures that upon certain conditions, like the death or disability of a partner, that the remaining owners are able to purchase your shares of the business, or that your shares will pass directly to your heirs, depending on what you want. So this will prevent your beneficiaries from getting stuck owning a business they don't want and can't sell, and it also protects your remaining partners from being forced to deal with new owners that they didn't count on. So let's see. And obviously, yeah, this in conjunction with your trust, this is gonna, all keep it outside of court, and there's gonna be no court interference in deciding who or how this type of buyout would happen. So yeah, so multiple owners, yeah, really important to have this buy-sell agreement. All right, back over to you, Judy.
Great, thank you. All right. So buy-sell agreement, so important. A lot of people think this is something they only should do right when they're going to sell their business, but you never know when there could be a death or disability. It can happen at any time, and you don't want to be without a plan. Not only a plan for you, but a plan for your customers and or clients, right? And that leads me right into my next topic, succession planning / sale of business. The life of a business owner. The life of a business owner is long and difficult road, fear of failure, business stress, time management. I mentioned this earlier, You're focused on customer relationships, employee issues, your business model, et cetera, et cetera. But most people won't embark on a long journey without advanced planning. But most small business owners neglect to talk about, their business development and their long-term plan. So I know in our industry, financial advisory business, only about 10% of financial advisors actually have a succession plan in place, which is really sad for their clients. So I'm happy to say that we've taken care of that. Here's some statistics. 82% of businesses fail to do so because of cash flow problems. Small businesses employ 59 million people in the US. 50% of all businesses are operated from home. It's probably higher now. 84% of small business owners feel like they're optimistic, which is great. And 64% of small business owners begin with only 10,000 in capital. So I thought that would be fun. When we talk about succession planning, there's some really key points that you want to think of when you want to grow a valuable business or a sustainable business that will carry on after you. You want to think, are you developing a business, or do you just have a job for yourself? A sustainable business will continue to exist without the current owner. So you have to have a quality management team. These are some of the value drivers, having a good management team, having sustainable cash flow, having a solid and diversified customer base. We actually recently helped a client who purchased a small business. It was a very difficult purchase because there were only 2 customers. And that's real tough because that's a lot of risk to take on. If one customer leaves, that's 50% of the revenue right there. So we help them with a structure and how to structure that business where they share the risk with the seller. A growth strategy, if a business has a growth strategy and a growth trajectory, it's more valuable. Financial controls, stable, obviously improving cash flow. And if you have a business continuity plan, which obviously would include a buy-sell agreement. Exit planning. So if you do your exit planning, what you really are doing there is setting yourself up to exit the business on your own terms. When do you want to exit? How do you want to exit? Who do you want to take over the business? Is it going to be an internal takeover, an external takeover? And you really develop a roadmap. These are the 7 basic steps to exit planning. And I'm not going to read them off. We do have a certified valuation analyst on staff, Alan Trim. And he's certified to value business or analyze the value of the business. And he is a very skilled and knowledgeable in business transactions. So if anybody wants to make an appointment with Alan, well, we can certainly facilitate that. But he did prepare this slide, and he says basically from start to finish, the process can take 2 to 3 years, but usually takes a minimum of 18 months. So if you have a goal of selling a business anytime in the next 5 years, you should really start your exit planning now. I think if you have a goal of ever selling your business, you should start your exit planning now because you want to create a sustainable business. So again, any one of these topics could be a whole workshop, but those are some nuts and bolts on succession planning. And Mandie, I'll turn it over to you.
Thanks, Judy.
You're welcome.
So important. Okay. All right, number 4 is, oops, sorry. Whoa. Oops. Succession plan. So this is, you know, right in line with what Judy was talking about. So yeah, like Judy said, you know, we don't know when we're going to be incapacitated or pass away. So obviously we're hoping we live a very long time and we don't need to do this planning yet, but we just don't know. So it's good to have this all your plans in place. So if something happens, your heirs aren't in court, having someone else deal with the family and sell the business or make choices that they wouldn't have wanted. So a succession plan. So if you hope to pass control of your company to your family, you should have a succession plan to make sure that your heirs know how to successfully run the business you've created, or sell the company without you. So if you want a specific family member or a team member to run your business, you should designate that person in the plan and then explain exactly how and when the business would be transferred to him or her. And if you want the business to be sold, you will want to start planning for that now. And this plan can be part of your trust, actually, or it could be a separate document and referenced in the trust. So right in the body of the trust, you're going to talk about who you would want to take over or who you would want to be involved in the sale, as well as any instructions on how to run the business without you. So yeah, I think that's all on my succession planning. So back over to you, Judy.
Thank you, Mandie. I like how our topics are aligning, and it's really funny because Mandie did her 5 topics, I did my 5 topics, and we didn't collaborate on what they were going to be, but they very much align with one another. So I really like that. This is my last hot tip for the day for small business owners, and this is to assemble your financial team. I've been talking throughout how we work in alignment with people's tax preparers, their estate attorneys. So we see your financial team as being composed of 4 members, your investment advisor, and we're going to be the people that kind of a lot of times are the quarterback for the team, because we do this whole goals discovery. We know what's going on in your life. We help you with your cash flow and your portfolio management and tax efficiency and financial planning and risk management, and we're meeting with you annually. Then Mandie would be down here in this quadrant doing your trust and your will and your advanced healthcare directives and power of attorney and your LLCs and charitable foundations if you have that. Then you're going to need obviously an insurance professional who's going to do your property and casualty insurance, your health insurance. We actually do life and long-term care insurance in-house. Our clients usually like us to do that part. We know how much life insurance they actually need. And one really important thing is to make sure that your insurance is up to date. A lot of people set it and forget it with, let's say, their homeowners, and now their home is increased in value and the replacement cost is more. So you really should be revisiting your insurance on an annual basis as well. And then obviously your taxes and your accounting. And for a business, this becomes even more important. You might even have a payroll service that's part of this quadrant as well. So having your financial team that can all work together when needed is so important. I can't say that enough. Even our client that wasn't utilizing their corporate structure, they had a CPA, and still they weren't maximizing their tax benefit there. So keeping that whole professional team working together well is really important. This next slide is a list. It's kind of our handout. We're happy to send this to you of all the different things really that we do, how we help Blue Summit. Tax efficiency, investments, cash flow, broader strategy, financial planning, estate planning, and you see a picture of our team there. And, you know, in closing, we want to offer all the attendees a discount on a full financial plan. So if you book your appointment anytime, well, this slide was done for our January workshop, but anytime this month. So that would be the month of March. Just let us know. And if you make your appointment, we're happy to provide you with that discount. So I'm going to say thank you and let Mandie present her last topic, and then let Robert close us out.
Thank you, Judy. Really good stuff here. Okay, just quickly, I know we're almost out of time. My last quick point is to get organized. There's a lot that your heirs and business partners are going to need to find if something happens to you. So being organized is such a gift. So yeah, let your loved ones know where they can find your legal documents, you know, your estate plan, your business plan, your financial statements, insurance policies, the key to your safe, all your online account access, and plus all your passwords to be able to access your online accounts. Okay, and then yeah, if you so obviously a trust is part of an estate plan that you know, protects your family, keeps them out of court if you're incapacitated or pass away. And so I also wanted to thank you for being here and offer you $250 off on your estate planning if you make an appointment with me. And I have a few dates here. So the March 22nd, 24th, and 26th. And if you would like to schedule that and claim that $250 off, you can go on my website, Mandie Bullock, esq.com, and I will finalize everything for you. Okay, that's all for me. Yeah, thank you everyone for being here.
Wonderful. Thank you guys for your presentations. I hope they were informative to everybody. And at this point, I would like to move on and just quickly open the stage for any questions from the audience. If you'd like to raise your hand, there's a raise hand button, and feel free to ask us anything. So I'll give a few seconds for things to filter in. If not, I do have some questions that people have typed in during the course of the webinar. So I'm just going to wait for a few seconds. Oh.
And I'd like to say thank you for being such a good administrator, moderator.
Sure.
Yes.
Sure. Yeah. We do have a question, and let's see if we can get her live. Katie, would you like to ask your question?
Sure. Can you hear me? I've never raised my hand before.
Yeah, I hear you perfectly, Katie. Hi.
So a slightly off topic, but for Judith and Robert, I was curious about, I'd love to learn more about the sustainability aspect of your business.
Yeah, I can talk on that. That's well, Judy's been doing it a very long time, but it's been my focus at the firm, or one of my focuses at the firm. So yeah, how do we do that? I'll try and keep it succinct, but all the investments that we choose for our clients, we use mutual funds. We don't pick individual stocks, but all of those mutual funds have what's called ESG mandates. So E is environmental, S is social, G is governance. Governance meaning how the companies that they choose govern themselves. So the companies that the mutual funds choose have to be responsible environmentally, socially, and from a governance perspective. So that's one way that they implement sustainability. The other way is that they engage with companies that they own or can have access to. For instance, like Amazon, if a mutual fund owns shares of Amazon, they can go into their boardrooms, talk to their executives, and demand substantial change. So we've seen pretty big commitments from, for instance, Amazon. They've committed to going net zero by 2040. That was spurred by conscious investors like our clients and the mutual funds that we use for them. So those are just two examples of how we implement sustainability in our business.
Okay.
Yeah.
And Katie, we'd be happy to put you on our email list. And from time to time, we send out stories, shareholder stories. We could send you a few. We've got so much, we could drown you in amazing stories about how really shareholders are changing corporate America. So
Well, yeah, add me to the list. That sounds great.
awesome. So glad you asked. Thank you.
Yeah, one more real quick, if you don't mind, on the same.
In fact, that's a whole workshop all by itself.
Yeah, well,
We'll
I'd
do
like
one
that.
of those.
Do you find that having that specialization hinders you in any way?
Yeah, I would say it keeps it prevents us from getting clients we don't like.
I understand that. Looking for a value match.
It's a good filter. Yes.
Yeah.
So, but no, it doesn't. I think there's a common belief that has kind of been around for decades that if you're going to invest in a way that makes you feel good, you're going to give up returns. But that has been proven by lots of research to not be true. And
it's a myth that was going around for many, many years, and some people still believe it, but we have many studies we could direct you to that prove that sustainable portfolios perform just as well as non-sustainable portfolios, and perhaps even better in today's environment.
Awesome.
Mm-hmm. Yeah, thanks for your questions, Katie.
I will lower my hand.
All right, sounds good. I'll put you back on mute. So if anybody else has questions, feel free to raise your hand. For now, I'll just move on to a question for each Judy and Mandie. So Judy, we'll start with you. Somebody asked if they have a Roth IRA, can they still do a business retirement plan like a solo 401k or a SEP?
Yes, absolutely they can. So a Roth IRA is not a Roth IRA, not a Roth, as opposed to a Roth 401k, is done individually. That's why it's called an IRA, individual retirement account. And it is completely separate from the maximum amount allowed to go into a business retirement plan. So yes, you can have both. Now, can you contribute to both? That depends on how much income you earn. So if you make too much money, as many of you might know, you're not allowed to contribute to a Roth IRA any longer. Whereas inside of your business retirement plan, there are no income limits for contributions. So
and that's
it's complicated.
And that's one of the biggest advantages of a 401k or a Roth 401k is that you can bypass those income limits and you could be making, well into the six figures and you don't have anything holding you back from making contributions. So that's a huge value of a Roth 401k. Okay, so next question, and we're coming up to time here, so I'm going to make this the last one, unless anyone else raises their hand, is for Mandie, and that would be, what is the #1 estate planning issue for small business owners that you see in your work?
Yeah, I would say, the most unfortunate or sad consequence is not having a trust / succession plan. And so, the business is being pulled into probate, the court process, and things, happen that the owner wouldn't want, as far as, it's going to be, most likely it's going to be sold because someone that doesn't know you or your family is in charge of it, and is going to sell it for pennies on the dollar, and or could end up in litigation, people fighting over wanting to own it. So yeah, I've seen huge nightmares coming from businesses. So you can prevent all of that with a business succession plan, and a trust. So it's all what you want, and it's outside of court and conflict. So.
Okay. Okay. Good tip. Good tip. Well, we're pretty much right at our end time. So I'd like to wrap up and say thank you to everybody who attended today. And we will be posting this on YouTube, and we'll be sending you links so you can watch certain other parts or share it with other people. So thanks again for joining us.
Don't forget our next 2 workshops. I have them up on the screen.
That's right. We got one in April and one in May. So you can't click anything here on the screen, but just reach out to us. We can send you the invites, and you can get registered for those or tell others who might be interested. So thank you guys for being here. And if you have any questions, feel free to reach out.
Thank you.
Bye. Thank you.
Thank you, Robbie.
Mm-hmm.